Hi friends, Simit here from InformedTrades.com. Today is Friday, May 23rd, time for our daily forex chart review. Basically, in these sessions, I share the trades I'm placing, adjustments to existing positions that I have on in the market, all a process of learning together. A lot of the information I'm presenting is probably unfamiliar to you, or it might be unfamiliar to you. I'll be talking about trend lines, moving averages, candlestick patterns, what's generally referred to as price action analysis and swing trading. We have a lot of information on that over on InformedTrades.com. We have information on many other styles of trading, trading other markets. Check it out. Register as a member, set up a practice account, share your trades. We can all learn together. That's the idea. Okay, let's get started with we'll look at the charts. First chart, doing something a little different today. First chart I want to look at is a chart of Bitcoin. This is the what you see on the screen right now is Bitcoin US dollar exchange rate. I'm not commenting on the merits of Bitcoin as a as store of value, as a legitimate currency, as a payment network. I'm not talking about any of that stuff. I'm just commenting on its price and the patterns we're seeing in its price. And I did actually buy Bitcoin, so I did put on a real trade based on the price pattern that we're seeing here. So I looked at, also because this currency is so volatile, I looked at a logarithmic scale of the chart. And that's mainly to assess the trend lines here. Just to give you an idea, I think it's easier to understand visually. I'm going to turn off the logarithmic scale, and I'm going to turn it back on. Okay, so basically what it does is it helps gauge this how it's reacting to this trend line, or helps put this trend line in the context of percentage movements. So basically it's making the chart, scaling the chart for appropriate for a percentage, which I think is more appropriate for something as volatile and as small of a market capitalization as Bitcoin. Anyway, it broke above this trend line on a logarithmic scale, and it's also above, even if we don't want to look at it. We see it actually broke above it on a non-logarithmic scale earlier, but it broke above it on a logarithmic scale as well. We saw the price was really in a tight, very tight range for basically going back to May 27th. So almost a month, a little under a month, and then we broke out here May 20th. So we were in that tight range here. I'm going to view that as accumulation. We also have a pattern of higher lows, right? All of this is bullshit, and we broke above this trend line, this downward sloping trend line, going back to its all-time highs in December of 2013. And we are also now above, we just closed above the 200 exponential moving average. So we're above the 50, the 200 exponential, this downward trend line. We have a pattern of rising lows here, higher lows. All of that, I think, signals to me that the bears are exhausted. So I went long today, small order to go long, and I think it's reasonable to target the all-time highs here. So that's sort of the way I'm looking at it. We'll see how that happens, but I thought the technical analysis was interesting. Next up, let's take a look at gold. And let me make sure I turn off the logarithmic scale. Okay, gold, same situation that we talked about before. We've been in this, range for a month now. It's a question of what's going to happen. Are we going to break down south below 1280, or are we going to go above 1320? So this is the big range we're in, a $40 range here, 1280 to 1320. The bulls obviously want to see a breakout to the upside. Bears going to go to the downside. If we break out to the downside, I think a target retesting 1180 is very likely, or very possible, I should say. A reasonable expectation. If we break out to the upside, I think 1393, or this swing high right here, is I think we could get there pretty quickly. I'm bullish in the long term, so I think this is a good time to buy. Okay, so that's we've looked at Bitcoin, we looked at gold. Now let's get to my forex trades. I am at full risk capacity, meaning I have, so just to let me get my account up here. Okay, I have 5 trades on at the moment, one of which is at break even, meaning one of which has advanced in my favor considerably or noticeably, has crossed a resistance level, and thus I've moved my stop from where I entered. I move my stop to the price at which I entered. So if the stop gets hit on that trade, I will not lose any money. I won't gain any, but I won't lose any. The other 4 trades I have on, my stop is not at my break even. So if the price reverses against me and hits my stop, I will lose money. So I don't want to risk more than 1% of my capital at any given time. And on top of that, there's another rule of, I don't want to have more than 0.5%, more than 2 trades, because I'm doing 0.25% per trade, more than 0.5% on any currency in any direction. So I don't want to have more than 0.5% speculating long US dollar or short Canadian dollar or what have you. So those are sort of my risk parameters to help make sure that my risk is minimized and that I'm sufficiently diversified. Okay, so now that we have those rules, I've explained them a lot, and I'll continue to explain them a lot or go over them because they're so vital, in my opinion. I think they're the bedrock of a trading system, a trading approach. Let's take a look at. Let's start with the pair that's already at break even, Canada Swiss. I've been in this trade now for a month, a while. Got in right around here. Yeah, so I got in a little over a month at this point. And just holding out, once price crossed this resistance level here, I moved my stop to break even. It was previously down here, so I moved to break even. Now just waiting to see if it can hit here. I took half off at this doji here. This doji was at a resistance level. I took half off. Let's see if we can get to the final destination profit. That's Canada Swiss. Now all of my trades are in the money except this next one, Euro Dollar, and this one. We talked about this yesterday. It's not really looking too good for me. You can see it's very close to hitting my stop. It is 12 pips above my stop, and my stop is now also has joined the 200 exponential moving average, so it's right there. That's not, in hindsight, I maybe should have placed my stop at a different level. But the real warning sign was that, I entered here on this candle, and I was expecting price. We have a hammer off support, so I thought it was a good sign to enter. Something in general, I'm fine, or the analysis was thought out on this. One thing I'm thinking about is, whether I should really wait for price or if I should not make any exceptions for price being below the 50 simple moving average. Maybe I should always insist that price be above the 50 simple moving average I'm going to buy, and if it's uses truly as a buy-sell line, or buy when price is above it, sell when price is below it. I still tend to rely more on the overall directional trend. I'll look at this, I'll see a pattern of rising lows, and I'll think that's more meaningful. So we'll see. That's something I'll be thinking about. My euro dollar trade is not looking too good. It's 12 pips away. Now the other trades I have on, let's look at next one up is dollar Canada. Let's type that. Okay, now this is looking a little better. I shorted here at on May 13th. Price went a little in my favor, then bounced back. We got a good reversal candlestick out of this resistance level, so I was pleased to see that. And then we have another down day, so still this is looking better. Prices, in the money. It's below where I entered this gray dash line here. Now if price can close below this support level here, then I'll move my stop, this red line down here. Target profit is ultimately this green line here. Okay, so that's dollar Canada. Now the yen positions, as I've mentioned very frequently over the past month. I usually have a couple. I've been trading 9 years. Been profitable for the past 8, so only my first live year trading was I not profitable. In general, the pattern has been that I have 1 or 2 big trades that make me money, and then the rest of the trades are almost break even. So it took me a while to discover that was a pattern, but once I did, now I sort of focus on that. And I think the yen is really the big trade that I'm keeping an eye out for. And, InformedTrades.com/Japan, we have a whole bunch of information on the case for being bearish the yen. Here is where, in terms of where we're at, I entered Aussie yen, hammer off support, entered here. So far, so good. My stop is here, entry level here. Once it closes above this resistance level at 94.30, 94.32, I'll move my stop to break even. Partial take profit up here. Pretty straightforward. I'm only going to take half off here and then, reevaluate the rest. I want to hold out for a much larger move in the yen. In general, the yen, I'll probably look at the monthly chart. Let's actually do that now. And, yeah, right here, 105. So I would target, I'll take half off at 96.20 and go for 105. And that's the kind of big move that I would really like to see. Of course, you have to be patient if you want price. If you want to hold out for those big moves, that could take months, maybe the rest of the year. Who knows? Maybe longer. And of course, the goal is to develop as large of a position as I can to ride the bulk of the trend as safely as I can. Safety, of course, being paramount. I want to reduce risk every chance we get without hindering our profit or chance for opportunity or opportunity for profit. Okay, another trade I have on is pound yen. This is also, let me zoom in a little bit because it has one of my favorite patterns. Hammer off support is probably my favorite, but what's starting to become, or what could be my favorite, and is I'm really liking more and more, is a double or triple doji. When you see 3 candles like this, 4 candles really, in a really tight range, that's powerful. That signals the market is gearing up, and we had a little bit of that taste of that here. So I went long here. And now we're almost at the break-even level. If price can close above resistance, at or above resistance at 171.65, which might happen today, I'll move my stop from this red line to break even, and that trade will be de-risked. Now, in terms of the ultimate profit on this, maybe I'll take half off at 174.20. We'll see, but definitely I want to hold on half for all the way up here, 190. So 2,000 pip move, can that happen this year? Possibly. And if it does, that's the kind of trade where, if you have even half a position going for 2,000 pips, that'll be a nice trade. That'll work out really well. That's about it for where I'm at. Let's see, in terms of, I'm sort of pretty similar situation to yesterday, where I'm still waiting on pound yen and euro dollar. If euro dollar gets closed out for a loss, that'll free up risk for other trades. If pound yen, if it closes above 171.65, that resistance level there, I can move my stop to break even. That lets me freeze up some risk to look at other opportunities as well. That's about it. Best of luck in your trading. Any questions, join us at InformedTrades, and we'll see you next week. Take care.